Evening, folks, and welcome to our Trade Manager update session. I just giving some updates on the Discord channel as well. I see a few folks haven't yet found the link, but in any case, this is being recorded, and we will publish that. Anyone who needs to know anything about the Trade Manager going forward, not only can you access the recording, of course, but this is meant to be an initial training session, really an introduction for me to this really large update. Those of you who've got the Trade Manager will know that the last update was end of January, earlier in the year. And since then, we've been discussing a lot of things that we could do. Also, we've been given some restrictions from our funding provider, where they've gotten pretty strict about the requirements, mainly because of the fact that they have a mandate with their investors. You know, we use a real money funding provider. There are not many out there, but there's certainly not many out there that do real money, and that's what we look for. We're not interested in our members being prepared to trade professionally and then not being given real live money accounts to trade. And that's a priority for me personally. And obviously, when dealing with these fund managers or these funding providers who themselves are fund managers and who have private investors, and it's a significant amount of capital, obviously we need to adhere to their mandate. So there's still a little bit of feeling our way as far as that's concerned, but it's I think, you know, we 90% of the way there, and the last 10% possibly doesn't matter, but it's the kind of thing that we can deal with easily in future updates and discussions and training. All right, so let's start from the beginning, because I know that not everybody here has had the opportunity, or not everybody watching this will have had the opportunity to use our previous Trade Manager. And obviously I've got up on the screen now the dashboard for the new one, which is going to look quite different in many ways for even you veterans. So I'm not going to belabor the point and worry too much about the previous version. It's still out there. It's still available to you. Anyone who currently has access to that, or anyone who is a subscriber, can have access to the legacy version. The big thing about the legacy version, obviously, is that it's multi-strategy, and we had the daily impulse and H4 impulse in particular, as well as potentially the overlay, which, although we've done a lot of work on the strategy, hasn't necessarily been updated inside of the Trade Manager. And the reason is because we've been working on this version of the update to the Trade Manager. Now, the reason for that, just so that you've got some background, is because the funding provider is concerned with any trading approach that has a fluctuation or inconsistency in position sizing and even risk taken over time. So, you know, if you take a trade on the daily impulse and then you also take one on the H4 impulse, the position sizes are significantly different. And also the maximum exposure, the maximum open risk, all of these things tend to be a lot more variable when you are trading the multi-strategy approach that we have adopted for more than a decade very successfully, and obviously is one of the key aspects of the trading that we have in the GoPro Trading Academy. Now, you might then ask yourself, well, what's the point in moving to a single strategy? Well, you can, as long as you are able to use an approach that achieves many of the objectives of multi-strategies. And the main one of that, of course, is being able to trade across multiple instruments that are less correlated. Now, when trading across currencies, and certainly when doing it on the higher timeframes, there's a very high level of correlation. That correlation does tend to drop as you go down the timeframes, but it has to be said unless there's a big news event. But even then, you could say the same thing for correlation across multiple asset classes. So even the correlation between commodities and currencies and equities tends to narrow a lot when there is significant news. And if you look at 2008, obviously, where all of the equity markets and the commodity markets and the currency markets, all the correlation tended to either +1 or -1. And that's why we are very focused on looking to decrease or reduce correlation as much as possible, not just across instruments, but over time as well. And of course, that's one of the weaknesses of a multi-strategy approach, is that, yep, you are decreasing correlation across strategies, but you still have correlation across instruments and in time. So what we've been pushed to do, and there's nothing wrong with this, it's been working very well, and it certainly simplifies matters, is we've been pushed to adopt a single currency approach, but one which allows us to spread out the correlation over time. So we have low instrument correlation, we have low time frame correlation, and certainly low strategy correlation, because we've only got the one now. So that's also fine. All right, so let me just jump into then the why bother with a trade manager at all. And the reason is when you're starting to dip down into the lower time frames, it becomes very difficult to manage trades appropriately. So unless you've learned the trick of staying awake 24 hours a day, 5 days a week, and you can only sleep on weekends when the markets are closed, then you're going to need a trade manager if you're going to be trading many of these highly effective strategies. Now, you can get around that, of course, and the best way is to either go up in the time frame, so end of day strategies, and of course that's what the daily impulse is all about. With the daily impulse, you don't need a trade manager. You just need to be able to check your charts once a day and make sure that you set your selection criteria and also manage open trades, and that's fine. No problem there at all. But if you're going to do it properly, you still need to be awake after the markets reopen, which is obviously after 5 p.m. Eastern Standard Time, which is the end of the currency trading day. If you can do that, then fine. But then, even when it comes to trading other instruments like gold, there's another hour to wait. So you've got different time frames happening there as well. And you need to be able to adopt that. So there are ways around that. We've taught you that. If you're trading end of day, you can basically place your trades and manage your trades late in the evening in anticipation of the candles that you're looking at closing pretty much where they are. And should there be any reason to think that that's not going to be the case, which would happen not that often, then you can stay up until the end of the currency trading day, which, as I say, is 5 p.m. Eastern Standard Time. Now, for those folks who are based, for instance, in South Africa, which I know many of our clients are, that is for part of the year at least, purely by coincidence, also midnight, which is Central African time. And that's in the summer months, but in the winter months, it's 11 p.m. So that's not too bad. That's certainly manageable. So that's really fine if you're trading an end of day strategy. On the other end of the spectrum, if you're trading much lower time frames, like the 5-minute time frame, then you're going to limit yourself to certain periods of the trading day, which is really the high action periods, when we've got the very active times, certainly from just before London Open, I would say is the best time for us to trade. For folks who don't mind getting up really, really early in the morning, for the night owls, then certainly the Asian session can be pretty good for Asian pairs. The New York session tends to be a bit of a rodeo, so you really need to have your boots strapped on tight. But for most folks, the London and European session is where they will look to make their money and then hang up their boots for the rest of the day and come back the next day. And even then, probably only 3 days a week, Tuesday, Wednesday, Thursday. And that's also fine. But what if you want to trade a strategy where it really requires you to look at the charts once every 4 hours, or potentially once an hour throughout the entire week? And to be honest, I think this is where the sweet spot in trading is. And why do I say that? It's Well, because if you trade the lower time frames, most of your profit, or certainly a big chunk of your profit, is being given to the broker in commission and spread. So depending on what type of broker you use, the broker's making the money and you're working for them. So that is just unfortunately a fact. And if you want to look at the stats, we can have another session on that. But it's amazing. You'd be amazed how much money you make for a broker. And remember, they make money on every trade that you take, win or lose. The opposite end of the spectrum is, as I say, something like the, well, maybe not the end of the spectrum, but if you're trading end of day, the problem with that is that things are quite slow. So one of the reasons why people like the H4 impulse is that it really ups the ante. It gets things moving. You're able to meet profit targets in relatively short amounts of time. And the nice thing about it as well, of course, is that the trading costs aren't that high relative to the amount of profit that you're making. Now, that is absolutely true. The H4 impulse is, without a shadow of a doubt, right up there in terms of being one of the best strategies that we have. And of course, that's what our previous and original trade manager looked to capitalize on, is the power of consistency on trading around that time frame. Having said that, there is a very close relation between the 4-hour time frame and the 1-hour time frame. And the triple time frame alpha approach, which by its name, as you know, looks to use 2 selection time frames before dropping down to a final execution time frame, looks to capitalize on that relationship between the, in fact, the daily and the 4-hour, first of all, and then also the 4-hour time frame and the 1-hour time frame. And that is what I'm going to be showing you here. Now, the reason why this trade manager, therefore, the way I've done this and the reason why I've done it this way is because it effectively allows you to trade on an hourly basis for the whole week. Now, you can limit that however you want, no problem. But if you want to be able to trade the whole week with an execution time frame on the 1-hour time frame, then this trade manager will do that for you. In other words, it's looking for setups based on your selection criteria. It's looking for setups at the end of each hour. There are limitations on that. We don't want to be trading around midnight, or should I say 5 p.m. Eastern Standard Time. We don't want to be trading in low liquidity periods. We want to make sure that when we're taking a trade, the spreads aren't massively high and things like that. So there are serious limitations around that. But when I say serious limitations, it's only really those certain parts of the day. Likewise, we don't necessarily want to be trading around major news events and so on. So it generally comes down to when liquidity is low. And the reason for that is because that's when risk is high. So the risk of gapping, the risk of losing more than what you expected to lose or plan to lose is vastly higher around those time periods. So we look to limit trading or to reduce our trading around that time. Nevertheless, you still want to be able to manage open trades. You want to be able to trail stops and all of that good stuff. All right, so now, folks, that's pretty much the logic behind this. The trade manager is effectively able to take the job of trade management away from you. What it also does is, as you know, for those of you using it, is based on your primary selection time frame criteria. It looks at the secondary selection time frame and confirms that the criteria that you predetermine they are met without you having to get involved. And then finally, on the execution time frame, it looks for final selection criteria as well as execution criteria, looks for all of that, confirms it, and then physically takes the trade, including position sizing, including placing the stop in the right place, including putting the target in the right place. It does everything for you, the whole lot. And then once the trade has actually been placed and taken, it then manages it for you through to conclusion. So for those of you who are used to the trade manager, you know this stuff, but if you haven't seen or used the GoPro Trade Manager before, it's pretty amazing. It does most of the things that you need to do for you. But the one thing it doesn't do is determine on the primary selection time frame, whether the conditions are met or not, and that is up to you. The other thing it doesn't do is determine when to not trade based on news. And I'm going to show you how you can use the Trade Manager to look after that for you as well. All right, so I'm actually looking at one of our members' accounts here. So you know who you are. Thank you very much for letting me use it, even though you didn't know. And it's just this, the Trade Manager has just been fired up on this very recently. And as you know, the markets haven't been doing too much. I'm not sure if she actually used it today. In any case, let's have a look at the big picture here, first of all. There's a lot to take in on this page, I grant you that, but the one thing that you will immediately notice is that we have a list of instruments to trade, and we are restricted to these instruments for the time being. So we, apart from the primary currency pairs, we've also got gold and the US oil, XTI USD. Now we could add indices and so on to this, and I intend doing that in the future based on demand. But you know, we wanted to get this operating model out there, tested and ready for you to use immediately. And obviously, if you are a user of the Trade Manager currently, then you get this and you get future updates. Okay, so here's our list of instruments. And you'll notice that we've got the bid. We've also got spread impact. Those of you, if you're a member of the Academy, you know what that is. Now, the spread impact is based on the 5-minute charts, the 5-minute ATR. So that's why it's a relatively large number, but it's a sensitive number, and as it should be. You know, we want to know what the ATR is, and you know, you can see at the moment the Aussie Kiwi is showing around 25 to 30, 35%. On the spread impact, which is the highest at the moment, and you can restrict that. That's maximum spread impact. That's what that number is over there for you. All right, so that's what we've got there. Now, in order to be able to trade these, what you need to have is, if you want to go long, if you want the Trade Manager to, based on all the selection criteria for this strategy, and remember, this is the Alpha Stealth, which is the triple time frame H4 impulse effectively. It's like the H4 impulse with execution on the 1 hour time frame. And those of you, if you haven't seen the triple time frame training, then I urge you to go and do that. We had a boot camp on that pretty recently, a workshop. So please do go and check out the training on that. And also inside of the Academy as well, we've got training on the pattern classes and how to use those. All right, so if you want to go long, all you need to do is type in an L, obviously L for long. If you were to type in a B, it's going to show up red. It mustn't be B, okay? It needs to be L. L for long, not B for buy, and S for short and sell is fine. So if you put an S in, that's pretty safe, but it's the L and not a B, okay? So just to get that sort of down pat. In the past, we had everything. Just make sure it's an L, please. All right, so you need to make that decision based on your evaluation of the daily time frame. So you go to the daily time frame and you say, you know, do we have reason to believe that we're in a trend on the daily time frame and in an impulse wave of that trend? If the answer to both of those questions is yes, it's either an uptrend or a downtrend, and therefore you just put in an L or an S. That's it. The Trade Manager will do everything else for you based on how else you set these settings, so to speak. So let's go through the settings then. And obviously, for this to work properly, you need to have the user code correctly input. You need to have your phone number. It needs to be the right account number. It won't work if you don't have a user code from us, and that user code is based on your account number. It's based on your phone number and a couple of other criteria. So you can't use it without the user code. There is the user code for this user. You need to have the switches set to 1, as you know. If you need the whole thing to stop doing everything altogether, then you just put any other number in this top box here, the override switch other than 1. If you want to continue managing trades, but you don't want new trades, then you can just delete this number as well here. With a 1, it's set to take new trades. It will, at the moment, look to trade 0.2% of $1,000. So So this is a bit of a change from the previous stuff, and you can see obviously with all of my comments, once you've got it, it'll give you guidance on that. This is also, again, because of what our fund manager wants. If you want to change that, if you want to have your percentage risk based on your account equity balance, then all you need to do is change this number. You can just go equals, drop it down, and Bob's your uncle, and it'll match your open equity. But that's not what we want with this account. Well, I presume not. All right, so what else? Entry method for the moment, please leave it at 1. Okay, what we're going to have in the future is a humanized version. So one of the restrictions we have from our funding providers is that you shouldn't, and this is the official stance, is you shouldn't use a system created by somebody else, but they've given us the nod, but we need to work with them so that their broker isn't hammered with a whole bunch of orders coming through at the same time. So we have a way of randomizing that over the first few minutes, or even within the first minute of the hour that conforms to the setup conditions. Remembering, of course, that not everybody's going to be doing the same thing as well. I'm not going to run through the trading stop methodology. You guys know what the 2.5 and 3.6 rules are. This user set things up in their own way. None of that has changed. So if you're not familiar with that, then you need to look at the training on the strategies that we've done on the trade manager that we did for the previous version. So that's all fine. Likewise with targeting, whether you want to have a fixed target, whether you want to have advanced targeting, there's all of those different options. The pullback candles, likewise, you know, what's the pullback method do you want? There's different, you can be more aggressive or more conservative. Again, that's in previous training. Initial stop methods, just leave it as it is, but you can vary that if it's your own account or if it's a funded account. Stop gap, you can see this user has decided on a 5% of ATR stop gap. Maximum spread impact, as I mentioned, you can see the spread impact if it goes, as for instance, when Aussie Kiwi is showing 47.5 now, it would not take a trade because of that. Maximum lot size, you don't need to worry about because of our risk manager, which I'll come to in a second. So that's a bit redundant now. Selection period, you can see that this user is looking at on the secondary selection time frame. We're looking at a 13 candle HDC channel, 13 plus 1 being 14. And then a new thing that we have here now, of course, is the choice between using 5 candle fractals or 3 candle fractals. And if you go into the comments again, you can actually see how that actually works. So I won't necessarily go through all of this, but many of you know, of course, that depending on how sensitive you are to more or less significant levels of support or resistance, you should use 3 versus 5 candle fractals or vice versa. And of course, if you're using your XABCD patterns, our WM patterns, then you need to decide which ones need to be 5 candle fractals and or 3 candle fractals. Maybe all of them 3, maybe all of them 5, or a variety. And you can actually set that up here. So that in itself will take me about 15 minutes to do training on. And if you need help on that, we can do a training session on it. But quite frankly, it should be pretty straightforward. When it comes to execution time frame, we basically want to have the most recent fractals as 3 candle fractals. Whereas on the secondary selection time frame, I can see this trader is basically going for well, C is a 3 candle fractal and B to X are 5 candle fractals. So only C is a on the secondary selection time frame is a 3 candle fractal, and that's a pretty a good stance to take. All right, so that's one quick addition. But talking about the secondary selection time frame, you know, how can you not worry about that? Well, that's what this section over here is for. So you decide on, first of all, secondary selection time frame, what pattern classes are you prepared to accept and which you're not prepared to accept? Well, this user is only looking for class 1 and class 2 patterns. So that's great. And on the execution time frame, class 1, class 2, class 4, 5. That should all be pretty straightforward to you guys who've done the training on the pattern classes. The one thing I would note is the override switch over here, which basically says that if you've had a breakout of the HDC channel on the secondary selection time frame, which by the way here of course is the H4 time frame, then it doesn't matter what the pattern class is. If you've got a big breakout and you've got a huge directional move, you don't want to miss out on that just because you're being pedantic about what pattern class came before that. So you can go for that or not go for that. If you take that one out, then you won't have anything. Right, this other stuff over here is pretty much the same until we get to scaling in. I'm not going to worry about that for now. We will do training on that in the future. The option to scale in is there now, but there's a whole technique around that. And the interesting addition here is trade management, both to break even and then obviously for take profit. So as you know, when it comes to the trailing stop method, we have a trailing stop both to break even and in the separate methodology, or you can select a separate methodology if you choose, which this user hasn't. It's the same in order to manage past break even. So you now have the choice of using either the execution time frame for your trade management or the secondary selection time frame. So whatever you've selected up here. So if you've got a 3-6 to break even, for instance, on the execution time frame, it will use through the 3-6 method on the 1 hour time frame to get you to break even. If you then set up the which this user hasn't, but if you were to set up the trading stop methodology for the secondary selection time frame to the take profit, then whatever settings you have over here will be used, but now on the H4 time frame. So if it's a 2-5 or a 3-6, it will actually use that now on the secondary selection time frame. So you don't have to do that. You can. This user is using both on the execution time frame, but if I was to change that 1 to a 2, then it would actually use the H4 time frame, and in this case it's a 2-5 method, obviously, as you can see. All right, so another one is the barrier trade avoidance. So if you're coming straight up to the top of the last phase 1 and you're executing a trade within a factor of, in this case it's 1 times the secondary selection time frame ATR, it won't take the trade. So that's because you're basically trading into a wall. And again, that's something we could talk about in more detail in the future, but I think many of you would consider that to be common sense. All right, so let's finally just have a quick look at our risk manager. You can see it's switched on over here. What this is good for is to help you help the trade manager to know how far it can go effectively. So you can see this user's got a maximum open risk of $50. So if the trade manager identifies, well, let's say we've got open risk at the moment, there's only 1 trade open and its open risk is $9.97. But let's say we're risking $25 a trade. We've got 2 open trades with open risk of $30. Then if this was 30 and it's 2 open trades, then a new trade would push the total open risk up to 55. Because the maximum risk is 50, it will not take another trade. Automatically, it will prevent a new trade being taken. The same principle applies here. So there's 0.02 here, it's way off the maximum lot size, and that's why this maximum lot size number here is redundant if you use this. So if you whatever you set that to, if the next trade based on your risk per trade, your percentage, is going to take you over that threshold, it won't take the next trade. Maximum trade's 5, there's only 1 at the moment, but if you were up to 5, it wouldn't take another one. So that's the quite active risk management. All right, folks, last thing then is the excluded period. If we had news coming up, and I think for instance tomorrow we've got some news, I think on Aussie pairs in the morning and then Canadian dollar in the afternoon. So I think it's 4:30 tomorrow. You could basically say, well, I don't want to take a trade from midnight all the way until after the news event, which let's say it's 4:30. Let's say you don't want to do it until 6 a.m. and that's broker time. It's all broker time. It will not, and you could just copy this, of course, to all Aussie pairs. So just take it down there, and so on all the way down. Oops, I didn't do that very well. There we go. All right, so you just copy that down to all the Aussie pairs, and it will not take a trade whilst that's the case. You've got 3 potential time periods during the day to do that. It's way overkill. I grant you, you probably don't need more than 1, but just in case. And obviously, as you know, you can exclude days. You can even exclude 4-hour candles down here on the bottom left as well. Start end candle. So if I made this number here 2, well, the only difference there, of course, is that it won't take any trades before 8 a.m. broker time, but then across all of our instruments. So, this is obviously on an instrument by instrument basis, whereas this is for everything. Outside C close as well, just notice I've mentioned that before, that is on the secondary selection time frame. If you want to insist on having the outside C close, then you just set that to 1. Right, so folks, that is just a brief intro, and I hope it's useful. Obviously, this is designed mostly for folks who are already using the Trade Manager. I have obviously all of your details. If anybody else does want to have access to this, it's largely designed for people who are focused on the funded trader program, which gets you as quickly as possible to trading $2.5 million. And not using this would add on a minimum of 6 months to getting to that point where you're trading a $2.5 million live money account. And if you waste 6 months of making, let's say, 5% for yourself in a $2 million account, then the opportunity cost on that is quite high, as I'm sure you'd imagine. I think it's you're probably throwing away a couple of $100,000. And the for this Trade Manager, still same price as always, which is $150 a month. And we also do have a bonus strategy coming out in a future version, but that will be an elite version of this, if you like. This is the standard version, which all of you who are already on the Trade Manager program will be getting a link to upgrade it. The code is the same as the H4 Impulse. You're welcome to still use your old H4 Impulse Trade Manager as well. Just make sure you use that code, and of course we will still supply you the codes for the Daily Impulse on the Legacy Trade Manager. Just bear in mind, you can't use 2 Trade Managers on one VPS. You need to get another one set up. All right, so I see Greg's got a question. Yep. Okay, Greg. Well, you and I can chat. I'll send you the link to it. No problem. I think you missed that boot camp. We can certainly fix you up there. No problem. Any other questions, folks? Awesome. Good. Well, I hope you can see the value in this. And those of you who've been using it for a while now, I know that you've gotten value out of it. And thank you for your continued support. But yeah, obviously I'm here to try and help you to get to success as quickly as possible. That's my aim. I'm not looking to do it for a lot of people. I'm looking to do it for the right people. So if that's you, just drop us a line. You can send me an email at support@gptacademy.com or ian@gptacademy.com. You guys know how to contact us, and we will. I'll take it from there. And by the way, if you want to test it out on demo, happy to help you to do that as well. That won't cost you anything. Good stuff. All right, folks. You're welcome. Okay, perfect. All right, I'll post this recording up as well. So you can give me any questions you want then too. We'll chat soon. Have a great evening. Bye for now.